there's actually been some conversations about even rate increases more recently. There are some challenges, of course, with inflation, and the labor market remains relatively strong. So basically, I don't see a case where we see a rate cut there next week. But we have a bit of a slower data week here, but we will take a look at retail sales and housing before the last Fed decision under Fed Chair Powell coming up there next week, as well as kind of a preview of what we're expecting there. And basically also looking at how Fed Chair Kevin Warsh's stint may go, and some things that I think I heard from the recent testimony that we want to kind of keep an eye out in the new Fed regime here moving forward. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to help to bring to you the market news, data, the trends that we're watching, and help you feel more empowered after each of these weekly updates. Again, we are a little lighter on the data side of it, so I'm going to go through that pretty quickly, and then we're going to spend most of our time on our question of the week really tied to the Fed. But there are a couple things I wanted to make sure to touch on. One is we did get retail sales numbers out. Retail sales were up 1.9%. We also got pending home sales numbers come out, which were up 1.5%, and we saw mortgage applications up 7.9% as well. So basically, the reason I wanted to kind of bring in some of the housing data for this week's update is because this has been a bit of a challenging data point over the last couple of years or so as interest rates have gone up. And I wouldn't say that this one data point means that we're out of the woodwork, so to speak, but we are seeing a bit of an increase in home sales, pending home sales, and then we are seeing mortgage applications, up a bit as well. So maybe this is a sign that we see some changes in the housing market here moving forward. I will share that obviously real estate and the housing market is very location dependent. So keep in mind, if you're in the Pacific Northwest, we haven't felt much of this really, even though maybe we have to a degree, not the same as what we've seen nationally. So keep in mind, these national numbers are a bit more reflective of maybe, what is going on in maybe less populous areas, or in areas that maybe aren't as much of a hub as a larger city, and may kind of demonstrate some of the challenges with the higher rates that we've seen. So I think that's an important thing to watch. We were going to cover U.S. leading economic indicators, but that was pushed off till next week. So we'll make sure we cover that here as we come up to next week. Before we spend our time on the Fed, be sure to tune in next Thursday because we have a lot going on. We've got consumer sentiment and confidence. We've got the Fed decision, of course, and press conference, and this should be the last of Powell's term. We also have, right after that, we have GDP, income, inflation, and spending all the day after the Fed decision and press conference. But before we break for this week, again, what I wanted to do is talk a little bit about a preview of what we see coming up next week for the Fed. But maybe more importantly, I wanted to tie this all to what we were kind of looking at with some of the comments from Kevin Warsh and the testimony there recently, and what that might mean for ultimately what's ahead for the Fed as we get a new chair in place. So next week, with likely Powell's last meeting and decision as chair, I think that is very unlikely we see any changes really. I guess we could see a surprise, you never know, but I think we're kind of in a period now where there's actually been some conversations about even rate increases more recently. There are some challenges, of course, with inflation, and the labor market remains relatively strong. So basically, I don't see a case where we see a rate cut there next week, but that's pretty standard at this point. I think most analysts, most of the people that are kind of looking at the Fed's path ahead, are suggesting we wouldn't see a cut. However, what I do want to talk about is when we do have Kevin Warsh in as Fed chair, and what that could mean, assuming that is where this goes. But basically, what I wanted to share is tied to his testimony. I think it was on Wednesday, and basically, he was in front of Congress, and I wanted to share kind of what we took away from that, besides a big headache of listening to all the questioning and all the above. The biggest thing that I noticed out of this was that it seems like there is a large focus on the balance sheet from Kevin Warsh, whereas in the past, it's really been focused on, well, increasing the balance sheet, but doing it quietly and really focused on the interest rates, right? So again, I'm reading between the lines here a little bit and how he answered some of these questions, but that was the main takeaway I got, is that it seems to me as though he is going to be very much more focused on the balance sheet than what we've heard in the past. And from my perspective, that is a good thing to hear. I think that the Fed's balance sheet has grown significantly since 2008, and maybe to a degree that maybe it shouldn't have. And so this is good to hear that there's a bit more of a focus there, because I think it's also important to note that over the last couple of years or so, since 2020 more specifically, interest rates, whether from Powell, the Fed as a whole, or media in general, has been the main focus. And clearly, the interest rate movement is not really impacting inflation right now, right? For those who do pay attention to this weekly update more frequently, you've heard me share that before. I don't really feel like the just changing what the Fed considers their interest rate has a direct impact on inflation as much as maybe money supply does, for instance. So I think that this focus on the balance sheet is great to hear. What he does with that, I don't know yet, and so I'm not saying I'm thinking that he's going to be a solution to all the problems, but I do think it's good to hear at least a shift in tone to maybe look towards the balance sheet as part of their toolkit as well, and not just interest rates. So very interesting to hear that. And again, I'm reading between the lines here a little bit, but that's kind of what I picked up and how he was answering some of those questions. So it will be interesting to see, and obviously, assuming this does go the way it looks to go, where Warsh is Fed chair here shortly, obviously there will be more comments at that point. And so hopefully that will support kind of what we're hearing, but it seems to be that that's maybe the case and what he'd be watching moving forward. And just remember that the Fed is a committee. It is not one person. So regardless of his focus, that doesn't necessarily mean that that's going to create change in those areas, but it does mean that there may be some conversation that maybe was swept under the rug a little bit more in the past. So again, I'm excited to hear this. Obviously, there's questions about Fed independence and whether they cut rates because they should or because Trump. I'm trying to leave that out of the equation and more focus on the fact that he's talking about the balance sheet. What he does with that, I don't know. Whether that's good, I don't know. But I am excited to hear that there is a little bit more of a focus on that at the moment anyways, as opposed to just the interest rates. So time will tell. Looking forward to the Fed meeting there next week. And then obviously, assuming that this goes the direction it looks to be going, certainly looking to forward to hearing more from Kevin Warsh as time goes on, and what they're kind of looking at in the new regime. So be sure to tune in next week. Again, we have a ton to cover: consumer confidence, Fed, inflation, spending, you name it. So we got a lot going on there next Thursday. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.